Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, at the beginning of this week, the Australian dollar has displayed a further retreat from that resistant level of 74 cents. After 6 consecutive attempts at that level, and the rejection has now put the focus back on the downside due to the fact that we've closed under 73.45. With the dollar index nearly grasping the 93 handle, has put further stress on the Australian dollar and therefore now exposes the region of 72.85.95. So not too far away, and may again, like previously from the bullish outside range day that was posted from the rejection of that level, may see some kind of bullish disturbance if challenged. So I'm not getting overly bearish at the bottom of this range. However, the ADX is trending just, and along with that we've got a positive MACD. So it's a little bit mixed, but with the ADX trending to a negative case, therefore should put a little bit more stress on that downside and see how it plays into tonight at that 72.85 level. Now I've moved on to the weeklies for the euro just to get a little bit more of assessment because we've taken out the level of 117.50. Now, as you can see from the technical point, it is relatively negative due to the fact from the close of last week we've collapsed or buckled further for the RSI, and therefore with the dollar not likely now to see further gains beyond 93 and up to around 93.60 to 94.10, may put further risk to the downside to 116.80 and maybe to where this base comes in, where I believe 116.1025 area. The reason why I feel this support is significant is the fact that there is a strong bullish engulfing candle, and there's been a couple of rejections after the market took a very strong bull trend back in early 2020. So the market, as it slowly drops, and with the confirmation from 117.50, and even if we look at the dailies, we're getting a little bit oversold, but the MACD's just come through to a signal to support a negative case, and we're slowly seeing a trend coming through to the bearish case. It does put further stress on the euro. Dollar yen edges higher, now clearing that level around that 110.20. Looks towards the top side for the grand challenge of 110.70.80. I do anticipate a bearish rejection from there, or even a correction back to the downside. But still, let's see how it plays first of all into that level, because we do need to see a strong bear candle like we did see previously on 2 occasions. But I'd like, from the pattern though, there's no bear candles here and no trend, but the ADX and the MACD are married together. So this is why I feel there is at least another 40 points to the upside. Now the pound is pressuring this level of 138.35. Looking at the technicals, it does somewhat appear that we may see this level eventually crumble, and if so, would expose a region of 137.75. I'm not overly bearish on the pound as much as I am on the euro, due to the fact is that the euro is weighted at 57.6 to the US dollar and the pound is much less than that. So therefore we could see just a little bit of a drop, about 50 points if we take 35 out and reassess at 137.75, but still keep in mind that this level just beneath at 137.15 to 20 may harbour a very strong bullish response. So we could see, if I just like to get my pen, just draw a little bit of a drop here and could see a rebound like so. Now with the sterling leg a little bit undetermined in terms of fact of seeing a rebound from 138.35, could put a little bit of stress on sterling yen. I feel any advances towards the level around 153.50 should, or 30.50, should continue to fail. Technicals haven't fully broken down, so any top side of challenges may bring opportunity for that trade. Well, since that flash crash yesterday, we're finding a little bit of a stable price action for gold today, as it looks towards a support level, it looks away from the support level 22 and slowly climbing up towards 42. In light of the pattern, I'm looking at the 4 hour and I can see there is a little bit of a sort of a bullish case coming through here, and therefore may see a step up. Normally when you find significant levels broken, which was 60, we may get a challenge to that topside to see if it was truly a break, because there was most probably a lot of stops underneath this level. The reason behind that is if you go to the weeklies, you can see that from 1,760 there was little there, and therefore you can see that it's pretty much a bit of a drop, and it came through like it did on Monday, more on the open. So for my bias, I'm up for a bull case, at least another probably 15 to 20 points, but I'm likely to foul upon the challenge around 60, 68, with the first resistance of 42 and seeing at 52, and then maybe a pullback, because the broader picture is somewhat buckled since that heavy drop. So let's see how strong the bulls can be. I don't think very much so. To wrap up with oil, the market reached its downside challenge, and that was the rebound off 64.7080 after a hidden low of 94, I believe. From the rebound, though, the market is still showing a little bit of divergence here, but still the risk. If the fact is that we hold around 67.7090, we are seeing a bit of interest coming back into play now after jumping 100 points into the early European session. But I feel the market may still be a little bit on the jitter side from the concerns over the Delta variant. Overall, though, let's see if the market can clear 67.7090. Otherwise, 64.70 will be back in focus. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the rest of the day.